Okay, so let's have a look at the world famous Donchian Channel as used by the world famous turtle traders. So Donchian Channel here is plotted on the US dollar against Japanese yen chart. Okay, and each of these candlesticks represent 5 minutes. But for example, if you're trading off the daily chart, then what the Donchian Channel does is it plots the highs and lows of the 20 days. So it's a 20 period. And so the outer band here at the top is the high, and the lower band here is the low, and the middle line, that is your average of the two. So this is a 5 minute chart. Okay, and you can see the price stays within the channel, so it's very narrow at the moment. There's not much volatility there, but what you can do is you can look for a breakout of this channel, and this is what happens here. This is a live chart on Thursday, so we go here and you can see it's broken above this outer band here, and that's approximately 15,821. So you would buy there. Now your stop, this is a really good thing about Donchian channels. For example, if you didn't have the Donchian channel, you'd set your stop at the bottom of the wick there, but as we have the Donchian channel here, we can set the stop here at 15,805, which is about 16 pips. So you know that's your stop. And you could have a trading stop, so your stop would move up. But the thing about the Donchian channel is, as you can see, it moves up step by step. So as the price moves up, you can manually move up your stop as because the Donchian channel basically moves with the price. Anyway, so we get in here, okay, at 15,821. Now, there are many ways you can do this. If you're looking, for example, like 20 pips a day, which a lot of traders do, then you could set the limit, and you would have got out here where the blue line is at 15,846, okay, which is 31.41. That's 25 pips. So that's really good. Or you could just let the trailing stop move up, or you could move up your stop manually. So, for example, at the current time now, if I draw the line in there to show the current support is here, and that's in line, obviously, with the Donchian channel here. So you'd set your stop here at 15,836. Now, if it was to hit that, you're still going to get approximately 15 to 16 pips anyway. So it's still not bad. So you can let it run. For the last few hours, where are we? Since 9:50 this morning, and we're now 12. I think we're coming up to 12:50 now. It's the last few hours. It's been staying in this range, so who knows what it's going to do now. As you can see, the price has come below the middle band here, and normally, a lot of traders will trade above when it goes above the middle band. They'll buy, and when it goes below, they'll sell or they'll exit. Now, this is very similar, in fact, to obviously Bollinger Bands. But another indicator you can use along with the Donchian channel is the MACD. And if we look at the MACD at the bottom here, it sort of ties in line with what the Donchian channel is doing. So obviously when the blue line crosses the red here, see all these greens here, that's when you would buy it. And that's the same place actually as the Donchian channel, which is telling you to buy. However, the difference is the MACD gives you an exit strategy, because when the blue line crosses the red, you would exit. So you'd exit here just after that first red, and that would give you 41. So that still gives you your 20 pips. And you see it's coming down. It says it's still coming down here with the blue line crossing the red, but in fact it does start to go back up again. It still says it's on a downward trend, which I get it is, but it's more sort of, leveling out, keeping within that range. So you could use the MACD to give you an indication of when to actually exit. So I'll take the MACD off, but we go to the Bollinger Bands. Bollinger Bands work more or less in the same way as the Donchian channel. So we've got the yellows here, the gold lines, and you see it's just inside the Donchian channel, but I'll take the Donchian channel off so we can clearly look at the Bollinger Bands. And where the arrow is, that's where we were to buy. And as you can see, it's working pretty similar on the Bollinger Bands. The difference is, though, the Bollinger Bands, what you normally do with the Bollinger Bands is you buy or sell when it goes outside of the band. So here you might be like 5 minutes late. You'd probably come in at maybe 15,826 when that full candlestick closes above it. And then it comes back in. Or a lot of traders will actually buy when it just goes above this middle line, the 21 moving average. But you see it's going up, 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 carries on up. And normally traders won't exit until it comes below. So if you come below there, 38, there's about 16 pips. So you know, you're coming out maybe slightly lower. But as you can see, it's a similar pattern. It's staying within that range here. This big gap here, that shows you the volatility. Now the narrow gap shows you the, obviously it's, you know, it's really ranging now, which is similar to what we had. If we look at the Donchian channel, you can see it's very much similar. We take the Bollinger Bands off, and then we got the Donchian channel. So very similar patterns. So Donchian channel and Bollinger Bands are very similar. I hear a lot of traders using the Bollinger Bands, maybe not so much the Donchian channels, but you know, Donchian channel's been around for years. I say the total traders used it, and you can use it on any time frame, and it can be a very reliable indicator. Certainly, it gives you a good indication of, you know, the highs and lows of a range, where to place your stops, and it literally is good for swing trading, breakouts, price trading, because it literally follows the price. So yeah, no indicator 100% reliable. So always back test it, and you can use it in collaboration with other indicators. But it's certainly another one you could have for your armory. So yeah, certainly have a look at it and see what you think.